Welcome to Bitcoin Escape Plan. I don't know who needs to hear this, but Bitcoin is going lower. There are a couple key indicators as to why that is the current trend that we're going to go over in today's video. As always, we start off these videos with the 4-hour time frame just so we can get an accurate picture of the short-term time frame for the price of Bitcoin. If you're new here to the channel, you can go over to Bitcoin Escape Plan and subscribe to the channel there. Every Monday, I break down the price across multiple time frames for you ahead of time in the week, and then you can come over to these videos when you're ready. Excellent. Back to the charts. So the game plan for the 4-hour has kind of shifted a little bit. We were temporarily back above the 4-hour anchored VWAP that I talk about on this channel all the time, currently sitting at about 65.73K. As you can see over here, Sunday the 22nd, we had broken back below it during that big liquidity crisis down in that big red candle there. That broke us down after we had previously held strength above it. And for a while, it was looking like, I actually haven't moved this blue trend line, even though it needs to be adjusted now. I just kind of wanted it for, everything was going fine until that candle essentially. And then that really is what broke trend. And now we have to consider the likelihood that that trend line is just going to continue to get pulled lower and lower and lower until it's flat and useless, and that's really not that much lower than where we are. So what are the signs that are going to tell us ahead of time if we are going to break down to that 59.9K level again rapidly? Because again, that happened pretty quick. Like that happened really over the course of a day or two. Really just one day, pretty much, when you look at the 4-hour. Technically it started by that Tuesday. I mean, you can track it back from the failure of the 4-hour there, but that is an extended period of time where we are dropping below. Whereas recent history, we've kind of been chopping back and forth with it. I'll come back to the anchor VWAP in a moment. We've really been bouncing back and forth off of at least the 4-hour estimate. We'll go over the longer term time frames a little bit later on in the video, but we've been very much like pinballing from one side to the other and look like we're back on the way down to the bottom again, which is currently sitting at about 63.6K. Psychologically speaking, we want to be above 63K as well as 64K. 64K being a Fibonacci pivot on the higher time frames, and 63K being the 50% midway point from the 2025 all-time high. Both really important levels for psychological support and resistance. On the chart, obviously, it's going to be a slightly different number, but those are the numbers that like you could write it on a napkin real quick, and people would understand what you're referring to as the shape of the chart without having to look at it, which a lot of times I think that's how supply and demand assets are actually run, but not the point of this video. So over here, the low of that candle was about 62.8K. As you can see, the low of these most recent candles, a little bit higher, 63.2 roughly. So like that's pretty thin in terms of support at that level. Which is likely going to indicate that we need to test lower. And just the mere fact that we're below this anchored VWAP again, I referred to this as the elder VWAP. I have this drawn from 2011 on the chart. So when it interacts with it, it's important information. So we broke down pretty significantly below it again, technically longer than we broke down initially. We spent more time being below it to reclaim it, and now are back below it again after slightly longer period of time than we were breaking this time, but we've basically broken trend again to the downside. And for anyone who's not familiar with the anchored VWAP, this is actually a higher term one. The one that we want to look at is this one. So this is dramatically higher. This is like the highest that we could possibly believe that the price is going to go, essentially, and that would be predicated upon it bouncing really strong off of right there. So we would need to start seeing closes closer and closer to it and then rapidly start rising. But what's more likely, and it's a little bit hard to see on the 4-hour, what's more likely to occur is that we're going to continue to break down below the upper band towards the middle band and eventually need to come down and test the lower band, which is currently at $36,000. I've talked about it a bunch on this channel. I think 34 to 39 is like my realistic. That's where I believe the price can drop total over the course of the year. I'm still of the opinion that that is October, but we kind of have to play it one day at a time in markets like this. So that's the primary thing you should be looking at on the lower term timeframes is the reaction to price at 65.7K. And that'll shift a little bit over time, but not by a ton. You know, like even over here, it was like just below. It was like 698 instead of 731. Who cares? Pretty simple. Just got to remember 65.7K roughly. As long as the price is below that, it's going to have pressure to the downside. And then again, the psychological levels below that of 63 and 64K. So in the short term, now that we have broken below the 4 hour once again, we're going to need to see if we can get support at that 65K pivot before hitting those other two psychological targets. And it's not impossible for it to form there. Again, this is technically support. It's very thin support, like that's remarkably thin. I mean, even like volume wise, it did step in a little bit there. As you can see, there's a little bit more. I mean, almost as much selling as buying though. So a little bit jumped in there to defend those prices. We're pretty thin once we get down. I mean, even just to there to 59.7. So we don't want to spend an extended amount of time there. But even here, people stepped in at the 67 to 67.8 roughly, which really is just an expression of how many candles we have in that region more than anything. Like that's a lot of time over the course of February that we've spent chopping there. All right, let's zoom out to the higher time frames. So the higher time frames, we've got to take into context just the broad trend at the moment, which is bearish continuation. That's the 64K pivot that I was talking about before. The closer that we close tomorrow, Saturday, to that Fibonacci pivot, the more likely that Sunday, which will be the close for the weekly pivot, is going to get pushed down below that same pivot point. And it is the same on both. That is bearish continuation. That does not look like we're going to randomly have strength and shoot back to the upside. Not super likely. On the weekly, it does look like we had our initial test and failure, that we were really hoping to see another one of those, but what is looking more likely to me is that this weekly SMA is going to get pulled down to this 80K Fibonacci pivot before we interact with it again. Now, I don't know if that means we have to break down below before we can get back in here and reclaim a little bit. What I do know is that by the time we interact with that, it's going to be closer to 80K than 96K. That's all that I can interpret from the broader trend at the moment. Again, barring a massive candle like these guys to the upside, in which case it still is only going to interact with it at like 85K. So I could believe it'll re-interact with the price at somewhere between 80 and 84K, but we're not really seeing any strength on the higher time frames that would even indicate that that's possible. So if we close the month slightly above the 64K pivot, which again will be tomorrow at 4 p.m. Los Angeles time, so apply that to wherever you live. The closer we are to this Fibonacci pivot, the more likely that the price is going to open and break down below it. Now it's possible it could open, wick to it, show strength there, and go higher. But in general, breaking the monthly SMA is not an indication of a bullish trend, ever. It's just not how it works. So over here, we fought to hold on to it for 4 months. When we closed below it, we didn't even get back to it, and then it was gone. Over here, same story. We interacted with it for 3-4 months, wicked at it, lost it, and it was gone. And same thing for 2014 as well. It was a little bit quicker then. We broke it in 1 month, held on to it, wicked as high as it, and continued to break down lower. That's just the pattern. That's what happens. I know some of you probably watch other channels that talked about how the 4-year cycle was over and all this other bullshit about a super cycle. That's not reality. The reality is once we've given up the monthly SMA, we're gonna be below it for a while, for a period of no less than 6 to 12 months typically. So what that means is, and what most people who've been in for a couple cycles now, can attest to, is we believe that the low is probably going to be around here in October, which means the price is either going to have a significant breakdown all at once, which it does look like. It's already seen the majority of that, potentially not all of it. This one was a little bit more extended. But for the most part, we've seen a good portion of it. I mean, like I said, my estimation is between 34 and 39K. So where's 34? That's another 48% drop from where we are right now. 38 to 48% roughly from where we are now, which is not unreasonable for that to just take a. I mean, this is a 37.2% candle right there. That's crazy. It can happen very quickly. Even the candle that we're on right now is just below a 17% negative candle. We've seen a massive, massive drop to the 50% mark already. And that normally, when we break to the 50% retracement mark, that's just the market like confirming, hey, this is a bear market now. You need to accept that the trend has changed. And that's not a bad thing. It's really like you should be looking at this as a great opportunity to buy more for next cycle. If you are an investor in Bitcoin, if you are someone who is just a speculator and you're just trying to make profit off of the price in the short term, then you need to be trading it, not, just buying it spot. If you're just buying it spot, you need to be comfortable with long periods of boredom. Like, this is why I love Bitcoin, is it gives you clear indication on the chart of when to pay attention to adding cash to it. It's like the chart tells you very clearly. It'll be above it for most of the time. So while it's below it, this being the 20-week SMA, or again, this applies to the 50-week, the 100-week, the 200-week, for pretty much any moving average that you are using as an instrument, the price of Bitcoin on the higher time frames will spend most of its time above it, therefore meaning the best times to buy it are any time that is below it. So I really you should be willing to reframe that in your mind, that these are the times where you want to be most strategic about how you are applying more capital to it. I've already been clear multiple times on this channel. One of the primary ways I do it is by leveraging my credit at key points in the market. And we're not there yet. It'll still be a number of months before it makes sense to do that. And the first time that I discovered it and I did it was like around here, which I would say is like there's 2 points where it's actually like the best time to rip one of those strategies. And I think it's either at the absolute bottom or around there, because you have a long period of time where you don't need to pay back the money. I'm not going to get too much into this, but I'm already on the topic. Like anytime you are borrowing essentially or using leverage to buy heavily, you want to make sure that you're not going to be in a position of liquidation, which for this particular strategy, there is no risk of liquidation as long as you are paying back what you borrowed. That's a critical element, is having strong income. But as long as you can do that over that defined period, the price will recover quickly. And then the only other time is towards the end of the halving year. However, this particular instance, I don't think I would have known to use it in 2024 the same way that I did in 2020. Like the circumstance wasn't as clear. It looked like we had already run up and we were just going to continue to go up. So I think it's a little bit less clear sometimes on the monthly time frame, whereas the weekly time frame is like, it's pretty clear typically when the times are that it's like you're still taking on significant risk anytime that you're using leverage. But if you're trying to use leverage on a higher time frame, typically that's what you want to look for. However, this guy here, you wouldn't want to have been leveraging in November for it just to continue to go down. So I've been really studying this quite a lot for my own trading strategy. I'm mostly focused on spot accumulation, but I've started to get really interested in the futures contracts. So we'll continue to report to you guys on that as I learn more about refining my strategy there. But for the most part, on the higher time frames, once we've committed to a specific trend, we're going to be there for a while. And the only other instance of something interesting happening is something like that, a retest of the weekly SMA or the monthly, but the monthly is gone at this point. Interestingly enough, that is at the 47.6K pivot. We talked about this a bunch. That's why I was originally of the opinion that we were going to rise back to this 96K pivot, because it's about 2x that other pivot. However, it really looks like we've already failed that, and because we are left translated, I don't think the price is going to get back there. Like that same pivot that happened laterally here over a period of, this is December, this is March, so over a period of 3 months, it was allowed to still be close to the SMA, wick down below a couple times, and then close fully below that Fibonacci pivot, and then had a period of chop going into the end of February, which we've kind of seen the inverse, has just continued down in February instead of having a real recovery. And then it finally in March was able to have both an interaction with the weekly SMA as well as that level of a Fibonacci pivot. However, where it looks like we're going now, as I explained earlier in the video, I think that weekly SMA is going to get pulled down here to about 80K or about 84K, meaning that this is actually our first failure of 96K here that the chart is registering. This was actually the reclaim and failure while we were still unable to get above the weekly SMA. So by the time that we interact with it, this is going to form as resistance, like strong resistance. I'm of the opinion that we're not going to see 97.9K or higher for the rest of the year. I think that was the high, other than obviously, well, no, I guess that's the high for the year because already we're down below that. So that's something that we need to accept, is that we are now in the trend downward. I don't think that we'll actually get to, so this is the anchored VWAP here at 29K. I don't think that the price is going to get to 29K. I think that we're going to start to be barely touching, like this instance back here, we did break through it. Here we did break through it. Oh, actually, no, that's still the top. Which one am I looking for? I guess it would be this one, but it's still so early in the chart at that time that this was a more significant break down below, and that momentum one was more about staying above the middle band. This as well was more about proving that we could stay above the middle band. This one, we are nowhere near the middle band. We barely break the top band. So that's why I really think that the trend this time is either going to be barely breaking the top band or more likely closing above the top band, I think. That's why I say, again, 34 to 39 is where I can believe that it will drop to, but there may be some evidence of slightly lower than that. If we just want to think about in terms of monthly closes, why it would be above that is these guys here. And really, I talked about this a lot during that 2022, 2023 part of the cycle for analysis. This is about 60, what is that? Well, that's 59. I was originally then going off of the candle highs though, which is about, let's call it 64 just because it's easier. The midpoint of that is 32. And then I was originally referring to this as a 70K peak. It's now 69. But all you have to do is cut that number in half, and that gives you a realistic estimate of where the price is going to break below and struggle to get back to and need to defend that as a psychological level, which means we're going to experience the same thing now, where 63, 64K being the halfway point of 126 is going to be the point that the price has to significantly break down below before fighting its way back to and reclaiming it, consolidating, and then moving onward from, which I think will take the rest of the year, essentially. So it either happens very quickly that we start to lose it, and again, it could happen as early as Sunday, because if we close tomorrow too close to that, instead of, even if we can just get back up to 68, we don't even have to make another run for 70.2K at the moment. That would kind of put the weekly close closer, but we're still pretty far away from it. It needs to get to 76.2K to have any type of bullish momentum on the weekly time frame, and that's the same on the monthly. So for the most part, we've got to assume that we're going to break down below that and probably test lower. I don't think it's going to shoot to 44K immediately, but this one did. So it's really nothing preventing the price from doing that, other than that is a shorter drop than this one is, and it's more likely we'd stop somewhere in between here. Price has spent a lot of time there. That's a psychological barrier of the ETF buyers as well. So anyone with significant size position of IBIT is going to want to step in there to defend their position or top up their cost basis if they still believe in the product, instead of selling out, buying the gold ETF or something else. But it's reasonable to assume we've got a decent amount of support at 45 as well. Spent a lot of time there, and this is closer to that 39K that I said, 38.8. We spent a bunch of time there as well. So those are probably going to act as support, or again, even if they do get broken, I don't think it'll be by very much. 32 to 35 is kind of like the lowest I can believe, just because, again, those are such important psychological levels the previous time that it's reasonable to assume that they'll function as a form of support. If we want to take a slightly different look at it, this is 2017. 2017, the closing candles were 13.8, and this is 10. Oh, okay, yeah, because 13.8, yeah. So the price in 2022 did not quite go to that level, but it did break below the wick. The wick was 19.6, colloquially 20K, and the price had to go down below that level. We're now seeing that as well, where we've already broken down below 69K and would need to continue going lower, which, if we went by the same psychology here, then the price would not break much lower than 58.7K. I don't think that is the case. I mean, partly just because all of that momentum happened kind of at once, whereas here it was more distributed. And a lot of people do consider the first peak actually is the significant one to base analysis off of, and the second one was like kind of just how much liquidity there was in that cycle. And even started to see a couple other channels finally say this, which is awesome, because I feel like most people don't talk about it. Altcoins are not going to be the same moving forward. Like, it's really going to be the ones that are able to do something, and the ones that are like quick fads that people think they can make a buck on that will disappear. It will be moved to the edges. Like, the riskier, the better for those. And I feel like most people will be better off just learning the Bitcoin chart and like just focusing on learning how this asset moves so they can trade this asset even with minor swings, instead of having to worry about, if I buy this altcoin here, is it gonna 20x, or 30x? Like, the odds are much less likely in the current economic regime with how much less liquidity there is. And even when liquidity returns with the stable coins, I don't think that it's guaranteed that money is going to flow into altcoins the same way that it did in the 2021 cycle. There were no tokenized assets that you could buy at that time. You couldn't buy real estate on the blockchain, or certainly not like, in any type of significant like amount of volume. Whereas once we are over here, once we have seen this bottom for Bitcoin and are able to move forward with stablecoins being enacted, that money is going to flow into real estate. That money is going to flow into other forms like auto loans and stuff like that. Like, it's not going to be like JP Morgan Chase is going to add the stablecoin button here and then the buy Bitcoin button here. They're going to still want you to buy all their other products, all of the other things. They just will allow you to do it quicker now that the stable coins themselves are actually available for them to continue pumping out. So the liquidity will come. I just don't think that it's guaranteed to jump into like projects that make sense. Like Chainlink makes sense. Everyone has a partnership with Chainlink because it's a price oracle. I've seen some news that like Aave is having some trouble right now with governance and with the setup of version 4. But that's where the largest chunk of DeFi money is sitting, is on the Aave protocol. And like most people, I think it's above their heads, and like they don't need to be involved with it. It's like really nerdy stuff, this DeFi stuff. Like I don't think it's going to matter at scale until the banks figure out this crypto market structure deal and whatever they're able to like prevent crypto companies from doing, because the crypto companies will continue to innovate. And I think that the only thing is not going to change is Bitcoin will still be a reliable store of value during that entire process. Some of those altcoins are going to be absolutely worthless, even if they do stuff, even if they like are solving a problem. They don't solve the same one that Bitcoin does, and governments and corporations are not lining up to buy them like they are lining up to buy Bitcoin. So even like how when they decided that they were going to add other assets besides Bitcoin, like when they decided they're going to like add like Ethereum and Cardano and XRP, is like, I think it's ridiculous. They can serve other functions certainly, but to think that the underlying assets themselves are going to be equivalent to Bitcoin when they're largely either manipulated supplies or just inflationary supplies. Actually, Cardano might be a fixed supply. I think XRP is, but like, there's like a company that Ripple that like owns all of it. So it's just like not, this chart looks like freedom to me. Like that's what this chart looks like. It looks like everybody gets a turn. You just have to know what you're looking for. And we are currently looking at a wonderful time, once we zoom out, to be accumulating slowly or aggressively. If you're going to do so aggressively now, you need to be prepared for the likelihood that the price is still going to drop another 40 to 50% from where we are now into the rest of the year. So if you're using leverage at the moment, you should do so sparingly. Be very careful when you're doing that, probably trading the lower term timeframes. The strategy that I'm focused on is the 4 hour. I think the 4 hour is the key. That's where I'm going to leave the video for today, my friends. So just keep an eye on where we close on Saturday in relation to that 64K pivot on the higher time frames. That's pretty important. That's going to tell us, do we need to open Sunday and rip down for the week close? Because again, the week will close on Sunday, the month will close on Saturday. Wherever we close Saturday, it's going to put more pressure on the price, unless we're able to get back above here, which would be about 67.7, which I don't think is going to happen. Like I think it's more likely that we close pretty close to that 64K pivot and that the price gets pulled down into Sunday. So keep an eye out for that level, and I'll see you on Sunday with another update. Have a great day, everybody.